the end of the day, the best driver of housing affordability is for long-term mortgage interest rates to come down. Everybody knows that. But there are real reasons as to why it's not happening yet. Before these executive orders started to come into play, there have been questions about our deficit, and ultimately our long-term interest rates are largely based on how appealing it is for people like you and me and people who control large amounts of money as well to go in and say, I want to invest in 10-year treasuries, right? I want to go and let the government borrow my money for 10 years and make a certain interest rate. And when there's concerns or questions about what our national deficit is, and when there are concerns about inflation, it has less of a demand for people to go out and let the government borrow their money for 10 years. And the reason that's related to our mortgage interest rates is because investors look at what people are earning for that 10-year treasury yield, and they largely say, well, then I'm going to go and let home buyers borrow my money for, 30-year mortgages. And so it's all related to that. This discussion's been going on, again, before President Trump even was elected. Those are the reasons why interest rates haven't come down. It's because inflation has stuck around for longer than expected, and there were concerns about our national deficit. Now, with some of these executive orders, questions about tariffs, questions about immigration, questions about all of this have maybe led to more concerns or less concerns or whatnot. The market really doesn't know where to go from here. And so you've seen interest rates, actually 30-year mortgage rates, actually do a little bit of this since Trump took office. And it's because, again, we don't really know.